I'm just making sure it really is. Okay, yeah, sorry. Hi, welcome everybody to Financial Reports for Homeschool Groups, subtitled The Good, the Bad, and the Ugly. I'm your hostess tonight. I'm Carol Topp, a certified public accountant, and my website is HomeschoolCPA.com. I hope we have a very fun and interesting evening tonight, because it kind of sounds like a boring topic, doesn't it? But I'm going to try to make it as interesting as possible. We have a little bit of interaction going on. This is being recorded, and there is a chat room where you can write, questions, comments, things like that. I have two wonderful helpers monitoring the chat room, and they will unmute themselves at certain times to read off your questions. We're going to take a few breaks for Q&A throughout the webinar, so you can hold your questions or type them in the chat room when you think of the question, and Tara and Doreen will help monitor those questions. This will last about an hour, but it depends how many questions you have if we need to go longer. If you all don't know, my website is HomeschoolCPA.com, and I've written several books for homeschool leaders to help them run their organizations better. And they include these titles here, the one on homeschool co-ops, there we go. Another book with the very exciting title of The IRS and Your Homeschool Organization, but that is a helpful book if you need to understand tax-exempt status and the benefits of tax-exempt status for your homeschool group. The most recent book that I've released is called Paying Workers in a Homeschool Organization. That might be a good topic for another webinar if you're interested, but you know how you should go about paying some of the workers that you might have in your homeschool group. But tonight we're going to focus on money management, and some of this stuff I'll be sharing is repeated in book form in this book, Money Management in a Homeschool Organization, and of course a lot more. So just FYI, those can all be found on Amazon, but also on my website, HomeschoolCPA.com. Let's find out a little bit about you. We're going to have the first polling question here, if I can do this right. Let's see here. What is the role in your homeschool group? Here we go. There should be a pop-up box for you guys to click on and answer. Maybe you are the treasurer or the head honcho, whatever you call yourself, president, director. Maybe you're a board member, but not the treasurer. Thank the Lord. Yeah. Some other, or maybe you just don't answer polls, or you're just indescribable, or whatever. But I'm just kind of curious what people's role in their homeschool organization is. If you don't know, just answer other or something like that. I'll leave the poll open for another minute. I like to find out just who you are, where you're coming from, and stuff like that. It's helpful to me and interesting to me. Looks like most of the folks have voted, so I'll just stop the polling now and let you see. Oh, most of us, about half, are the treasurer, the money handler, and that makes a lot of sense. Although someone just asked me today, should all board members come? Certainly, because part of this webinar is going to be telling the board members how they can read and understand the reports that the treasurer might make. That did I share? Here, sorry, share results. I'm still learning how some of this stuff works, folks. Okay, thank you for your patience as I click around and figure out all this wonderful technology that we can bring you via a webinar. Let me put that one away. Okay, if you don't already know about this wonderful Facebook group, I did not start it, but the person who started it has given me administrator privileges and responsibilities. It's a group of homeschool leaders called I'm a Homeschool Group Leader, and it's nice because people from all over the country get on this Facebook group and can ask questions or, propose whatever challenges they're having or encourage each other. That happened today with someone who's fearful that her group's going to collapse, and other people were encouraging her. So anyway, if you want to join us, come and join us. I am a homeschool group leader. I think we're almost 600 members right now, and that's kind of fun. It is a, quote, closed group, so you just ask to be invited in, answer one question that I put up there, which is something like, tell me about your group. Yeah, so please join us. It's a wonderful way to interact with other homeschool leaders around the country. Maybe world someday soon. Okay, While I have your attention, dear homeschool leaders, I want to tell you that I know a lot of you enjoy helping your members, but you might also enjoy helping other leaders, a lot like the folks on our Facebook group enjoy helping other leaders. I am looking for someone to, or maybe more than someone, to mentor in what I do helping homeschool group leaders. I'm looking for someone, or maybe several people, who have a passion for homeschooling, who have some education in either business or accounting as a background. CPA license would be preferred, since a lot of what I do kind of requires the accounting, business, or even CPA background, and some experience in nonprofits. And of course, half of you being treasurers have that already, that experience in nonprofits. So if you think you might be interested in knowing what I do more, or maybe being mentored by me to do what I do, and then eventually have your own business doing something like I do, well, then hop on over to homeschoolcpa.com/mentoring, and you can read more details there. All right. Yes, it's a paying gig, potentially, if you're qualified. And you can read more details over at the homeschoolcpa.com/mentoring. Slide's not advancing. Come on. There we go. Okay. Oh, let's do another polling question, because I'm kind of waiting to see if anybody else shows up. I know sometimes if a webinar event is new, then sometimes people have a little bit of a hard time figuring out how to get there. Let's see. Where's my relaunch polling? Let's see. Is this it? No, we asked that one, didn't we? Oh dear. No, we asked that one already. Sorry. I'm trying. Sorry. Can you tell this is new? Polls. Is this number 2? No. Oh dear. I can't figure out how to. I'm going to let Tara or somebody else figure out how to bring up the next polling question, because folks are starting to, and then we've already asked this one.
Carol, you're the only one that has access to the poll questions.
Okay. Let me try this again. Oh, wait, I might have figured it out. I figured it out. Hey, okay, here we go. Thank you for your patience again, folks. Here's the second polling question. Have you ever talked with me live or in person or via phone? The possible answers are, yes, we had a phone conversation, or your group did, or we've met in person. I have traveled to homeschool conferences and met a lot of you in person. We've not talked, but you've heard me speak, maybe, or heard the podcast, heard my voice before, or maybe we've not talked, but you've emailed, or nope, never done neither. Neither spoke to me nor talked to me. And of course, your last answer is Carol who? So I was looking briefly, I don't know if you saw Tara or Doreen, my 2 helpers, that someone had quote, raised their hand. I don't know if you were able to respond to her. It went away now on my screen, but I saw it earlier. Okay. Let's end the polling and show you. Oh yeah, a good percentage, a third, we've spoken on the phone, or we've even met in person. Some have never. So, you know, welcome. Nice to meet you. Let me get into the meat of this. What I decided to do, since I think this topic of financial reports can be kind of dull and boring, and sometimes CPAs can be kind of dull and boring, I strive not to be. I decided to go with a theme based on that old television show, What Not to Wear. You remember watching that show? It was kind of fun, you know, this couple of man and a woman would evaluate people who really needed help looking how to dress better. And what we're going to do is we're going to take a twist on that, and we're going to talk about what not to report. In other words, how not to make an ugly financial statement, but how to make a beautiful financial statement. All right, so with that, you're going to, again, see the good, the bad, and the ugly of financial statements, and maybe giving a few tips on how someone could improve their financial statements. So we're going to make it like a game, okay? Make a learning fun. The topics are going to be this. What is the goal of this webinar? Why even bother making nice financial reports? What is the point after all? We're going to talk about the chart of accounts. We're going to talk about the financial reports, 2 of them that you should be giving your homeschool leadership. We're going to talk about good ones, what they should look like, bad ones, again, what not to report, and really ugly ones like find the errors that others have made. Kind of like a quiz. I will say there is a handout of these slides, not quite the slides, but a handout of this information, including samples of the chart of accounts and samples of a good-looking financial report. So you have a good example to follow. All right. And I think, yep, Doreen just posted in the chat room about where you can get that handout. It's a PDF. And I will send it out on the email follow-up to this webinar as well. Okay, so here are the hosts of What Not to Wear, Stacy, London, and Clinton Kelly. And oh, they're so happy. See how they're looking at those good-looking financial reports right there? So that's the goal. We want really good-looking financial statements. And we want to put a smile on Stacy and Clinton's face. And so that's what I'm going to do. I'm going to show you really good-looking financial reports. And your goal is to make your reports look like those, okay? So ultimately, but here's why. Why bother? Okay, why even bother putting together financial reports for your leadership? Well, it's because you have what's called a fiduciary duty, which is a duty that you have been entrusted with because someone has given you their money and expects a service back, or more importantly, they have given you their children for a period of time to lead in your homeschool group. So you have these fiduciary duties, and these are sometimes written into your state laws. And in Ohio, these are at least 3 of the duties that nonprofit leaders need to follow. And those are the duties of caring for your organization, the duties of management, managing the money and the resources you've been given, and the duty of compliance, which means compliance with the law. The IRS in your state may have reporting requirements. You have to report your financial information to sometimes the IRS and sometimes your state. So it's just plain good management to have financial statements. I am sometimes shocked that groups will tell me that their treasurer never reports anything, or the board doesn't ask, or it's obvious to me when they send me the information at the end of the year to prepare their IRS return that the board has never looked at these financial reports because they are fraught with mistakes, and you'll see some of them. And ultimately, we're trying to avoid mistakes. You as board members should all be looking at these reports to find where the treasurer might have made a mistake, and it's your job to keep him or her on their toes. But also, why do we bother with financial reports? Well, you need to know when your level of compliance or your level of filing with the IRS might need to be at the next level. The IRS has dollar thresholds of when you can report very simply no financial reports, or you have to start reporting actual reports called the Form 990N. This is assuming you're a nonprofit tax exempt organization. And if your gross revenues, your total income you bring in, and I'll show you examples of what that means, is more than $50,000 a year, you have to start reporting more details to the IRS, and you better be ready to do that, okay? But also, we want to be above reproach in all of our dealings, and we want to set a good example for the next generation of leaders that will come after you. So even though you may know that you're managing the money well, if you don't show it by producing good-looking financial reports, the next generation may copy your bad example. So of course, we want to set a good example. And they may not ever take this webinar, but they will end up following your good example. Let's start out with talking about the chart of accounts. And what that is, well, let me just show you a good example. What it is it's a listing of all the sources of income and then all the sources of expenses. And actually, it even goes a little more complex than that, and it lists like all your bank accounts if you're using some software like QuickBooks. But we're going to focus on your sources of income and where you spend your money. So where the money comes from and where it goes out. And oh gosh, look, Stacy and Clinton are kind of shocked by my statement here because I am telling you, you only need 4 categories of income. Let's talk about income first. You only need 4 categories of income, and these are pretty standard categories for all nonprofits, small, medium, and large. If you're a for-profit business, it might be a little different, but for non-for-profits, small, medium, and large can classify all their sources of income into these 4 categories, and they are donations. Obviously, a lot of charities get a lot of their income from donations. Homeschool groups, maybe not so much from donations. You usually, your homeschool leaders, get most of your income from number 2, program income. Okay. And then you might have some from number 3, fundraiser income, and maybe a tiny bit from interest. If you have a savings account, you earn some interest or some other kind of income, and that might be like a refund or a reimbursement or something like that. And at this point, you might be having some questions like, Carol, what? How can I put everything in 4 categories? So start typing away. Start asking your questions, because I'll give you a little break in a minute and we'll go over them. But look on my example here. Look under program income, and this is where you should use subcategories and make this unique to your organization. So under program, this is, you running what you do, your program. You might have several types of income, like membership dues, co-op income, field trip income, or an event income. And then maybe even under event income, you want to list your I can't talk, your individual events. But for field trips, you can just lump it all into one account called field trip income. Some people like to break out the fundraisers into the different fundraisers and things like that. But that's a pretty nice, concise list of the 4 categories of income, along with some subcategories and subcategories. So similarly, let me show you the categories of expenses you should have in your chart of accounts. And guess what? Stacy and Clinton are still shocked at this statement. Only 4 categories of expenses as well. And I got to tell you, most people, when I look at their financial reports, have about 20 line items for 20 categories of expenses. And really, you only need 4. And then you use subcategories if you want to go into more detail. The 4 types of expenses you should show on any financial report, again, whether you're small, medium, or large nonprofit, would be, first of all, probably the biggest for you guys is program expenses. And what goes under that? Well, things like your co-op expenses, your event expenses, your field trip expenses. Okay. Then general and administrative. This is anything that's not related to your program. As I tell people, this is anything that doesn't touch the children. Okay, the program, the kids. Things like bank fees or insurance, office supplies, website, stuff like that. Fundraiser expense. Remember we saw fundraiser income before? Yes, and fundraiser expense is here. You look at the 2 numbers, you'll tell if your fundraiser was successful or not. And then finally, other expenses, if you can't categorize it into program or general administrative or fundraiser, but most everything should be able to be categorized into those other 3 areas, and not much use of the other types of expenses. If you're using software like QuickBooks, see this last one down here, it's called Ask My Accountant. It's kind of a fun little expense. If you really don't know where to put something in QuickBooks, you can put it under Ask My Accountant, and then have an accountant to ask. And if you can either ask me, or I have some bookkeepers who are homeschool parents who are used to dealing with homeschool organizations, and they might be a good resource for you to learn how to use QuickBooks or some other kind of software, which might have a category called Ask My Accountant. We never want to leave much money in there for long. It's just a holding place for you to put something until you can figure out where it really needs to be recorded. All right, here's some tips. Again, gosh, Stacy and Clinton are just shocked at some of the things I am saying to them right now. I hope that's not distracting to you. Okay, first of all, I think I've already said, you can kind of use very generic categories like the IRS categories, those are the ones I just gave you, or very standard nonprofit categories like donations, things like that. And then use subcategories and subaccounts to make it easier to read and easier for you, the treasurer, and your board members to understand and classify things. And use very clear names. Never have a category called reimbursements. What? Why not? Okay, here's why not. That reimbursement was for something. For example, if you're giving someone a reimbursement, what was it for? Was it because they bought some office supplies? Well, then put it under office supplies. Or were you reimbursing them for some classroom expenses? Probably. Well, then put that expense under classroom expenses. But I got to tell you, probably 25% of the financial statements I see from homeschool groups have a category called reimbursements. And I go prepare your IRS statement, and I don't know what that's for. What was that reimbursement for is what I have to ask them. And then they got to look up each individual one. Far better at the beginning, as you're recording what your expenses are, to not call them reimbursements. Okay, so never have a category called reimbursements. Instead, use one of the ones that I list there. Those four. It's either a program expense, it's a general administrative expense, or maybe you're reimbursing somebody for a fundraiser expense. Okay. Here's some more tips. I sometimes will see people who say contributions, and it's a nice round dollar amount, 10,000, 1,000, something like that, and I'll ask, what charity did you donate to? And then they say the church that let us use their building. And then they go on to explain, we call it a love offering, or we call it a gift because the church doesn't require it. Okay, well, even if they don't require it and you think of it as a gift, what you are really doing, ladies and gentlemen, is paying that church for the use of their building. You're just not randomly paying a church, okay? You're paying them because they let you use their building. So you should call that what it is, which is rent. Even if you don't have a lease, if you want to call it facility use, fine. And you can understand that your agreement with the church or whatever organization, but it's usually churches, is on a donor decided. I mean, it's on a basis of that you get to decide. In other words, they're not setting a rental amount like a landlord does. But you should not call it a love offering. You should not call it a gift, because it's not. It is use, it is rent, and it is facility use. And I have argued with homeschool leaders over this. Whatever the church wants to call it is up to the church, all right? But on your reports, it is rent, it is facility use. You're paying for the use of that facility, so call it what it is on your financial reports. The other thing, and I see some questions coming in, I can't look at them now because it'll distract me, but we'll get to them later, very shortly. The other thing is a lot of homeschool groups will give what they call scholarships. And I put the word scholarships in quotes because to the IRS, a scholarship means when you give a grant of money to a college. Now I know for a fact that Nancy's part of our webinar tonight, and her organization, the Arizona, the state organization in Arizona Families for Home Education, AFHE. They actually give scholarships, true scholarships to college, high school graduates to go to college. It is actually a check that AFHE is writing to colleges. That's really cool. That's part of their program expenses. One of their program expenses is scholarship grants. What you guys do, though, when you talk about scholarships, 90% of the time is you are really saying, I'm giving a discount to a family. Like they should be giving me $200, I'm discounting it $50. All right? Those are really just a reduction in the income you could have brought in. They're not an expense because you didn't write a check to that family for $50. You just brought in less income than you normally would. And you should probably call that a fee discount or a discount, but not really quote scholarship. Or if you want to call it discount/scholarship. Let me back up a couple slides and I'll show you how I put it in the here. Look at under program income, co-op income, this group would record what fees they were supposed to collect from the co-op, and then they had a fee discount. This would be a negative number. So say they were supposed to collect $10,000 in co-op fees, but they budgeted or allowed or discounted to needy families, or sometimes you give a discount to a second sibling or a large family. Then the treasurer would record, oh, I discounted a total of $200, so we didn't bring in all of our co-op fees, we discounted some. That's how it should be recorded. A lot of times I will see scholarships down underneath the expenses. which is not really the place it goes. It's really only a reduction in the income you could have charged people, and you chose to give them a discount instead. Hope that's clear. There's something to clear up. So, two things. Let's take one more polling question, if I can do this right, and then you guys type in your last questions. And I think, who's going to start? Tara, maybe we'll start you with, okay, wait a minute. I'm trying to figure out this polling thing. Boom, that is not right. Sorry, it's not working as good as I thought. Nope. Polling. Stop share results. Oh, I'm figuring it out. It's a little down arrow. Okay. Here is the next polling question, since we've been talking just a wee bit already about accounting systems like QuickBooks. What do you use for your bookkeeping or accounting records now? Maybe you just use your bank statements. Like, you don't make any summary. You just have your checking account statements, and that's all. And you tell the board how much your money is in the checking account. Or maybe you keep your records on paper. Some groups do that. Maybe use a spreadsheet. Maybe use some free accounting software like waveapps.com. Or maybe use paid software like QuickBooks. So we've got 70% of you, almost 75% of you reporting in right now. So I'm going to stop the polling. So it looks like we've kind of hit a max there, and show the results. And the winner is about half of you are using something like QuickBooks, and the other half are using either free software or spreadsheet. Good job, ladies and gentlemen. I'm thankful that only a few of you said you don't do anything, or paper. And maybe some of you on paper will at least get to a spreadsheet, which I think is safer, better, checks your math, or ultimately some free or paid software. I'm not going to spend any time talking about software. That's not what we're talking about tonight, but I just wanted to make you aware that there are other systems you might consider using. Okay. Tara, did I ask you? I think, yeah. Any questions? I see a few in the chat room.
Yeah, we do. We have a lot of questions, and I think we have so many questions, I think that we should just acknowledge right up front that I don't know that we'll get to all of them, but
okay,
let's do our best. So just to be clear, Carol has a lot more information to come, so there probably are a lot of questions that you have that we probably will still be covering. So let's start with, I have a question here from Michelle. She says, my expense reports don't look anything like this. She has a lot more information, probably a lot more line items. Should she change now in the middle of the year, or can she wait until the new fiscal year, which starts next June?
I think it doesn't hurt right now to start improving. Yeah, you can practice this year, and then you're gonna have, it's kind of like if you went on the television show, would they say wait till after Christmas to look better? No, start now. Start now. Why not? Get your practice. I'm gonna pull up the screen where we saw some of the chart of accounts. Okay, go ahead.
And if you want to go back, we have a question again about entering the discounts. She's saying, I bring in all of my income from the bank account. So if I give a member a $200 discount on a $500 bill, I only see $300 come into QuickBooks.
Well, in QuickBooks, maybe you should consider invoicing them, and you invoice the $500, and then you can set up in QuickBooks a discount. It's an item called discounts, and you can either put a percent or a dollar amount and say, okay, then I discounted this family $50, so their invoice only says they owe me the balance. I forget what numbers I use, 200 minus 50, $150. And then QuickBooks will spit out a very nice report. And the reason that's nice is because it shows your board, look how much we gave away in discounts. Is that too much? Is that not enough? Can we be more generous? What can we budget in more discounts or fewer discounts, right? So it's a budgeting and planning tool. If you just record only what you deposited, you're not giving the board the full picture of how generous have we been in offering discounts.
Excellent. Okay, there are a lot of questions about discounting, so I think that we'll kind of lump those together so that we can move on. We have another one that talks about, I see you listed memberships under program income. But since we, as an organization, don't technically have members, but rather supporting families with suggested donations, would those fall under donation income rather than program income?
That's a very interesting question. I don't know. I'd have to know more about your program. If you offer member benefits, is it purely a donation? Maybe. I don't know enough about the specifics of that program. You might have to email me and talk about that, because that's pretty specific to your program.
Okay, then let's handle one more before we let you jump back in, and we'll keep all these open just in case we can get to them later. Someone's asking, can they call the fee discount a tuition waiver?
Yeah, that's a good name for it too, tuition waiver. I like that too. Yes. Yes.
Okay, well, everyone, you can keep your questions coming. We'll be monitoring them, and we'll get to as many as we can as Carol moves on.
All righty. Thank you, Tara. Whew, I know that's not easy to field all those, as you're trying to listen to me and you're trying to read people's comments. I know that's not easy to do, so multitasking. Good job. Okay, so that was just our chart of accounts. That's just the list of the sources of income and expenses that you might see in nonprofits. Again, those 4 categories of each, but then unique each subcategories to your group. Here are the 2 financial statements that you should be reporting to your board on a regular basis. As the treasurer and the board members, you should be used to looking at on a regular basis, monthly, at least quarterly, probably monthly. Okay, the first one is called profit and loss. It's really, in the nonprofit world, is called a statement of activity. It's really a collection of your income and your expenses. So it's going to look a lot like the chart of accounts to begin with, okay? But here is a very well-dressed, see how well-dressed, that dress is very pretty. Here is a good-looking income and expenses for a sample homeschool co-op. Now, ladies and gentlemen, I had to make this up, okay, because I didn't have a good one, so I had to make it up, all right, because this is like the perfect looking statement of income and expenses, okay? So they have their income and their expenses, their income in the 4 categories of donations, program income, fundraiser income. It's kind of buried down here a little bit. Can you see that? And they don't have any miscellaneous. So this group it's just a couple months in, August to November. You can see they've had donations from Box Tops or Amazon Smile or something like that, and some individual contributions. Pretty small, which is pretty typical in homeschool groups. Membership dues came in, co-op fees came in. Here's their fee discount. See that negative number? $250. Let me see. Oops. Okay, just checking. And then they brought in money. As is typical in many homeschool groups, you've brought in a lot of money right away. And so their expenses are not as much as their income. That's very typical in homeschool groups, right? They've done a few events and a few field trips. So they've brought in $17,000 of income so far. Let's look at their expenses. Oh, that's just the top, sorry. I'm not showing much of the expenses down there. Maybe in the next slide, I can't remember. Oh, I know definitely in the handout, I show you the whole thing, okay, income and expenses. But let me show you a few tips. First of all, you put the income at the top of the form and the expenses down below that. Now, I have seen it in every convoluted way you can imagine, ladies and gentlemen. I have seen it go sideways. Income is one column, then followed to the right by expenses. I've seen it the opposite. The expenses are on the left and the income's on the right, like columns. What? No. Income at the top, expenses down below that. Typically, the largest categories come first, and the smallest categories, like miscellaneous, are at the end. It doesn't have to be that way, though, as you saw in my example
donations, because that's just more a standard nonprofit format. We put donations first, and then program income, which is probably your biggest source of income, come next. So it's up to you. If you want to follow biggest at the top and smaller as you go down, you would probably put your program income first, and donations, which are probably some of your smallest sources of income, maybe at the bottom. So this is really, really important, this next one. Do not mix income and expenses in the same account. All right. So if I am looking at someone's statement like this, and I see field trip and I see a negative number, I know what they have done is they have mixed field trip income and field trip expenses in the same line item account in accounting software. If you're doing an Excel spreadsheet,
you kind of can't do that, but in accounting software you can, and that's a big mistake because you are misrepresenting both the total income you brought in from those field trips and you're misrepresenting what the expenses are because you've put them in the same account. Instead, you should have just income go here and later down under the expenses put your field trip expenses. And then to see if you've broke even on field trips, you do the math, you do the subtraction. So please do not ever mix income expenses in the same account. 2 other tips. I see this a lot of groups that don't use accounting software, but typically are doing it on their own on a spreadsheet. They start with the opening balance and they add that to their income for the year. Your opening balance, or like your balance in your checking account from last year, is not income for this year, ladies and gentlemen. That's last year's. Kind of like when you go prepare your tax return and you know you have $10,000 in the savings account. Do you tell the IRS, oh, take my $10,000 from my savings account and add my W-2 and I'll pay taxes on that? No, of course you don't. You only record, and you report to the IRS what income you had that year. That's what this statement is. It's only the income I brought in that year. Don't pull in last year's bank balance and consider that income. I can't tell you how many times I see that. That's not the way you report income for this year. How do you report the fact that you had cash at the beginning of the year in your checking account? It's the next statement called the balance sheet. Finally, last tip here, I think, my last tip, one more tip. PayPal is not a source of income. PayPal is a checking account. Did you know that? It is a checking account. Money comes in, money goes out. It's a checking account. So when I ask people, tell me what, you'll see it on a balance sheet coming up soon. You know, what are the balances in your checking account at the end, or all your assets at the end of the year? And they'll tell me their checking account, they'll forget PayPal. PayPal is not a source of income. It is a checking account. And it should be treated like that on your financial statements. Okay, so let me point out a few things. Here's the same statement of income and expenses, or profit and loss, as sometimes we call it, with a few things to point out. Here's the fee discount. This is the only time you should ever see a negative number on this statement. If you see a negative number anywhere else, that's a red flag. This is the only time you should see a negative number, because what you're saying is, I should have brought in $13,000 in co-op fees. That's what I invoiced people, but we gave away a total of $250. Maybe all to one family, maybe to several, accumulated here. I don't know. Okay? That's the only time you say a negative number. Over here, event income and field trip income, you could have more subcategories underneath that if you want to, but maybe you don't need to, because it just makes this statement so much longer and more difficult to read. Is it really important what field trips they went on? Probably not. Is it really important what events you had? Maybe, if your program really cares about how much came in for the prom versus the fall picnic, fine. But sometimes you can just put that as a note in the memo field. This was the fall picnic. It depends on what your board thinks it needs to track, but realize that the more detail you put into this statement, the longer it gets, and all of a sudden you're reading 3 and 4 and 5-page reports, and nobody wants that. My goal when I've been treasurer, and I've been treasurer for about, I don't know, I think like 6 or 8 nonprofits so far. My goal is to make this statement, the income and expenses, all fit on one sheet of paper, ladies and gentlemen, one sheet of paper. Because I don't want to overwhelm my board with showing them 2 pages or 3 or 4 pages. Okay, what else do I have in here as a tip? Oh, way down here, fundraiser income. Okay, this can be kind of confusing because some people lump fundraisers and donations together, but they are different. Fundraisers are when you actually have some sort of event or activity to raise the money, and typically you're selling something. Donations are straight up money. You didn't do much except ask for it. So really, I consider Amazon Smile and Box Tops to not be fundraisers. I consider those donations, because you really didn't do a lot, like an event or an activity, to raise that money. It was a corporate gift through a program, General Mills running Box Tops and Amazon running the Amazon Smile program. They just send you money if you signed up for their program. So fundraisers are different from donations. And the IRS classifies them differently, which is why it's very important, as you have to start reporting income to the IRS, that you separate fundraisers from donations. I bet there'll be lots of questions about that. Okay. Here are the expenses. And again, 4 categories of expenses. Program expenses with lots of subcategories. Well, they have several subcategories. Co-op, events, field trips. General administrative expenses, quite a few of them there. Fundraiser expenses. They only have 3. They don't have the 4th category, which might be other or miscellaneous. And let's look at a few tips I have here. Here's where you can put more subcategories underneath as you want to. Okay. Look at here under general administrative. This organization, again, it's made up. Okay, but they have a category under general administrative for board development expenses. So this could be anything. This could be you think it's important for your board to have meals together, and you're going to put in your budget and in your financial reports that you spend money to pay for meals because you think that's important for your board to have that bonding time. Some boards send their board members to their state conference or even the national conference that HSLDA has for leaders, and they considered part of board development expenses. Some boards hire me to come in and do board training or board orientation or buy some of my books. That's all board development expense, and it's okay to have that. It's encouraged. Okay, here's a question. I'll answer it, but I'm going to ask it. If you haven't noticed already, there's something really big missing. Where are the wages or the independent contractor payments? Where? Where are they? I don't see them. Well, it depends. You would put it based on whatever that worker was paid to do. Was that worker paid to teach at a co-op? Then it would be buried, or maybe a subcategory under co-op expenses. Like maybe under co-op expenses, you would have wages, you know, whatever else the co-op might have, rent, just for the co-op, all right? Or maybe you hire administrative help and you hire a bookkeeper. And so she would go maybe under general administrative bookkeeping fees, wages for bookkeepers, independent contractors, something like that. Okay, maybe you hire a web designer and it would go under website. Okay, so these wages need to be split into whether they're for program or general administrative. I doubt you hire anybody to help with fundraising, though. If you do, chances are your state wants some extra reporting if you are hiring professional fundraisers and paying them. Okay? I think we have another Q&A coming up soon. So put your questions in. Okay. Okay. When you look at this statement, dear board members, when you look at this statement of your income and expenses, here are the kind of questions you should be asking yourself and discussing amongst you. Are these categories where our income should be coming from? That's why, you know, putting them in those 4 big categories of income. Remember, the income was donations, program income, I forgot, fundraiser income, and other. And then under program, you can subdivide it. Is this where it should be coming from, or are we too dependent on something unreliable like fundraisers? You know, are we too dependent upon donations? Could we increase our donations? I'm working with a charity right now I'm a treasurer for, and we're working on increasing our donations because we haven't, you know, really cultivated that part of a source of revenue yet. Or what other sources of income should we consider? You know, maybe we've never done fundraisers and we could. Then your board should ask itself and each other, is this where we should be spending our money? Look at the expenses side. Is there anything we can cut? Or should we add in something more for, like I said earlier, board development or something like that? And then finally, and I really didn't show it on those statements before, but you take income minus expenses, both in your budget and in your real life, you know, actual what happened, and ask, is there a surplus? Is this enough of a surplus? Do we need this big a surplus? You need a surplus to cover any emergencies. Of course, that's hard to plan for because they're emergencies, right? You need to cover your insurance deductible. What is your insurance deductible? Make sure you always have enough surplus to cover that every year. Do you want a bigger surplus so you can give away more tuition waivers or fee discounts and things like that? These are all great questions to ask yourself at the board meeting. Okay. Let me show you some bad examples of income and expenses. Like this dear woman who came on the program, brave soul that she is. Oh my word. And what not to wear. Well, this is kind of like what not to report. All right. So I'm going to show you some bad ones. Oh, we got to watch our time here. Okay. Here is a profit and loss statement. And they have their income sources: tuition, direct public support, other types of income, and uncategorized income. Oh boy, can you spot what I don't like about this? It's actually not too bad, but look, other types of income, $14,000. Now this is a large organization, $256,000 coming in, but still, nevertheless, to have other types of income of $14,000, not going to happen. You got to tell me, is it tuition, which is really program income? I would have renamed it program income. Or other direct support it's QuickBooks title. I would have put donations. That's what other direct support really is in this organization. It's donations, and that's what I would have renamed it. More standard language. But I don't know what other types of income means. And then of course they have uncategorized income. Not too much, $125, but categorize it. You know what it's for. At least categorize it under other, if nothing else. Okay. So that's not too bad of a profit and loss statement or a statement of income and expenses, but it could stand a little bit of improving. So I did have to go back. This was one of my clients, and say, well, tell me what these other types of income are and classify that, and then come back, and then I can prepare the IRS return. They obviously were preparing IRS returns with income of $256,000. I was preparing for them the Form 990 every year. Here are their expenses, and let me show you some things I really didn't like about this. Well, reimbursements. Remember I said don't ever have a category called reimbursements. What's it for? What did you reimburse somebody? It was probably down here for classroom and curriculum. But you got to tell me. Maybe it was traveling meetings. Maybe it was postage. I don't know. Tell me. Then they had something called business expenses, which is probably what I would call general and administrative. But why in the heck are bank service charges not under that? And why are postage and delivery not under that? And what is penalties and interest? I don't know. They should all be probably subcategorized or added into business expenses. Okay. So anyway, you can see this kind of list going on here. Some of them are numbered and some are not, and they're not categorized into the 4 major expenses that nonprofits should be categorizing things into. And finally down here, oh my gosh, almost $2,000 of uncategorized expenses. Oof. Okay. So anyway, needed a little bit of work. Not too bad, but needed a little bit of work. I think that's the last one on that. Yep. Okay. Now we're going to look at the really ugly. Ready? Really ugly. I could spend all day on some of these, but I'm only giving you, I think, 2 or 3. First of all, this was a list of expenses. I'm not showing you their income side. This is not a homeschool group, but take a look at it and tell me what you think I would say about this list of expenses for a charitable organization. What I found is they did something good. They have program expenses, and then they call everything else non-program. Well, non-program probably meaning general administrative. They didn't have, it appears, no fundraising expenses. But okay, so that's a step in the right direction. But when I saw this, I just couldn't believe it. It was like, there's a category called name tags and tent cards, pens. Oh my gosh. Okay, here's the problem with this. It is way too detailed. Okay. I want to move down that highlighter a little bit. Just too much detail. She even went so far as to, this poor treasurer, if the president was asking for this poor treasurer, breaking out PayPal costs, their flat fee versus their variable fee. Ladies and gentlemen, you do not have to go to this level of detail. All this stuff she's calling program expenses, it's only $1,400. She spent more in non-program of $4,000. $1,400. She could have lumped it all into one big category called general administrative. Maybe office supplies. Okay. I don't know why they're paying sales tax. This might have been before they had a sales tax exemption, which many states will grant you if you have 501c3 tax exempt status. This might have been before they got their tax exempt status. So they were paying sales tax, but she was splitting out and she was buying things what the sales tax was. Don't do that, okay? The list down here is not bad. You know, picnic, insurance, these are more typical things, right? But even what's the difference between advertising and brochures? Just lump it together. Call it general administrative / advertising if you must. All right, so she was just too much detail, just too much. Ready for another bad boy? Okay, yeah. I'm looking at the comments. Yep, somebody likes their Post-it notes. Oh my word. Okay, this is, I think this is one of the princesses from the UK. Let's see, was this Princess Eugenie, I think. Yes, Eugenie or Beatrice? This is Eugenie, I think. Anyway, this, okay, not considered the best fashion statement. Like, here's somebody who has their income and their expenses, and what they're doing is they're showing every month what income and expenses came in. I kind of like that. It's on an Excel spreadsheet. I kind of like that. That's okay. Further to the right, if we kept going, there's a total. But I'm going to let you take a look at it and see if there's anything on here that is really probably not good. Are you finding them? Let me point out. PayPal. PayPal is not a source of income, ladies and gentlemen. It is a checking account. You don't put checking account under your source of income, do you? Why are you putting PayPal? I know why. She's thinking money got moved in from PayPal, but the money came in from PayPal for a reason. It either came in for co-ops, for plays, for testing. Here's her program income. These three right here: co-op, play. I assume she means theatrical, or maybe I don't know. But the PayPal is only 27 cents, which is kind of weird. I don't know what that means. PayPal, I don't know. Why is that a source of income? Is it interest? I don't know. Okay, confusing. Shouldn't be that way. Income that's been unassigned of $200. Well, assign it. Where did the income come from? Did it come from box tops? Did it come from memberships? It came from something. At least other, but it shouldn't. That's rather large for this organization. You see, they're not really big from the numbers that are coming in. So $200 is pretty significant not to have assigned somewhere. Okay, down here under expenses. When I see expenses that are listed in alphabetical order like this one is, and 4 categories for co-op, spelled differently. When they're alphabetical like this, it means that they're probably using something like Quicken, which doesn't which just alphabetizes things, and they're not subdividing it into those larger categories of program expenses, general administrative expenses, fundraising expenses. This went on, as you can see, I cut it off at H. It kept going and going and going. Kind of difficult to read without summarizing. A lot of these things can be summarized, and it makes it easier for your board to read it. Where are our expenses mainly going? This is really difficult to read, okay? And especially the way the words are, you know, so not kind of standard, easy to read reporting. So this I would give if I'm going to give a grade to this one, I'd give it a C, headed toward a D. Definitely needs some improvement. Ready for the one that looks like an F? Oh gosh. Oh gosh, this is Princess Beatrice. Oh, remember that god awful hat? Oh gosh, that she wore to this Prince William and Kate's wedding. Oh, she made news. Very pretty girl. Look how cute her coat is, but that hat. Woo! Okay. Here is the statement that came in. Their sources of revenue, which is income, and expenditures. They're using some software that is unique to nonprofits with these words. I know it. Revenue and expenditures. Okay? Take a look at some of this stuff and tell me what you think. Anything that I'm going like crazy about? Oh yeah. Oh yeah. Oh yeah. Let's start, shall we? Right there. What in the heck are the sales for? It just says sales. Sales of what? And billable expense income. What in the heck's that? I don't know. What are sales of product revenue? Oh, are you selling a product of $21,000? What are you selling? Is this curriculum? I don't know. I don't know. But these two really bother me. Unapplied cash payment income. That means they have received cash payments. and have not applied it to the people, the customers, the families that they invoiced. So it's, quote, unapplied. They're using some software and they're not finishing the job. And then $10,000 of uncategorized income needs to be categorized. Shall we go on? Down here, other expenditures, other miscellaneous expenses of negative $3,000. How can you have negative expenses? What in the heck's that mean? And this really alarmed me. Reconciliation discrepancies of $6,000. It means they went to balance their checking account and they were off because their bookkeeping is a mess, of $6,000. So they just put it in a category of other expenses called reconciliation discrepancies. I don't think so, ladies and gentlemen. I don't think so. This is not going to pass muster. There's some flags I already said. Uncategorized income. No. This one, let's see, where am I flagging that one? I'm trying to remember. I don't know if that flag's in the right place. Other business expenses, maybe. Uncategorized expenses. That's probably, anyway, there's lots of flags going on here. Oh, reimbursable expenses. You know, I hate that. $36,000. Well, what did you reimburse people for? What did you reimburse them for? These categories don't tell me. So it's bad. This one is very bad. And these negative numbers. What I did with this client was I said, I can't help you. If this, what you're giving me, I can't help you. Here are the name of some bookkeepers who are experts. I think they're using QuickBooks here. You have got to fix this. And I filed an extension to do their IRS report because I can't prepare an IRS report like this, and I certainly can't sign off on it because okay. This is probably hours and hours of somebody to fix. I wish they had gotten some good training in the beginning. I wish this kind of financial report is what prompted me to do these kind of webinars. Okay. Let's move on. I can't stand it anymore. Questions and answers, anybody? Well, yeah, you guys are finding all this stuff. Oh my gosh. Yes. Thank you. Thank you.
All right. We have some questions coming in. A couple of them are in the category of in-kind donations. One is regarding donations for an auction and how do you count that? They give tax-deductible receipts and then auction those off as a fundraiser. The other is that a board member purchased supplies for a dinner that would have been reimbursed, but then the board member decided to go ahead and donate.
Okay, let's take that one. That one's easy.
Okay.
So it would have normally been an expense, but she said, I won't ask for reimbursement. Just give me a letter that says I donated. Fine. And it's called an in-kind donation because it's not cash and it's not goods. So you didn't receive cash that you can deposit. So you give rarely, nowhere on those financial statements, nowhere even on the a good financial statement, not these horrible ones. Nowhere does it show anywhere. I'm trying to find a good one where you record in-kind donations. You don't report it to the IRS. You could keep track maybe on a little note that says, let's thank our donors for the donation of 10 microscopes or 15 books or whatever, but we don't basically record in-kind donations, which are donations of goods, not cash.
All right, so then when they auction them off, they would, the proceeds would be reported as income?
That's a little more complicated. So I think I have a blog post about auctions. If not, I probably need to do one. And it's a little more complicated because yes, what the charity gets is the donation of the cash that was paid for that basket, their auction and offer basket, right? That's what the charity gets. That's what the charity, the nonprofit records. Carol Topp paid $120 for this basket. Deposit $120, call it a donation. Okay. The donor gets a thank you note. Thank you for donating a basket. The donor determines what the value of what they donated is. The charity never puts the value on what that basket donation amount was. Does that make sense?
Yes, it does.
Okay.
Another one, restaurant and charity drive donations and fundraising are becoming popular. So the income that you get when the restaurant gives you 20% of their profits from people that you've brought in through your efforts. Is that donation or fundraising?
Yeah, that's tricky, isn't it? You know, part of me could say, well, that was a corporation that gave you a donation, gave you a check. You did something, you held an event, but there really probably weren't any expenses involved. And what they wanted you to do, the reason they're doing it is because they want you to come into their restaurant. And basically they are giving you a donation. They're just gauging the donation based on the percentage of people that you brought into the restaurant that night. So I'd consider it a donation, a corporate donation.
Okay, I'll do one more because I know we have to be mindful of time.
Yeah, we're gone long already.
Yeah, for those co-ops who take deposits in May, but their fiscal year may not start until later, where do they record that in
I'm going
May?
to cover that. I'm going to cover that.
Okay.
I thought yeah. Under the balance sheet, I'll cover that. It's called deferred revenue. There's two ways of doing it. In that book, money management in a homeschool organization, I cover how you can record early deposits. If you're using software, I can give you quite a detailed description, including screenshots, but you'll have to email me about that. Okay. If you're not using software, there's a very simple method. Okay. So I'll cover that in a minute.
All right, I'll let you move along.
Yeah, thank you for all the questions. You know what? I think I can download all these questions, and what they will do is make great blog posts for me. Okay, so we're going to go on to the balance sheet, better called a statement of financial position in the nonprofit world, or assets and liabilities. Let's go on. We'll try to buzz this a little more. Here's a beautiful one. It's a beautiful balance sheet because I made it up. The balance sheet starts with the assets at the top. That is a listing of what you own on a particular date. This is November 30th. I'm predicting the future here, okay? You list on that date what the balance is in your checking accounts, like PayPal or your checking account, and maybe something like accounts receivable, which is where you have billed somebody that just haven't paid you yet, but you are due this money. This money is supposed to come into you, okay? It's receivable. You have delivered the services, okay? So that's what you own, and you deserve to get paid the $750, okay? Is what I'm saying. So not many homeschool groups use accounts receivable. Some of the bigger ones do if they're invoicing and then have money coming in that they are owed. Down here, liabilities is what you owe somebody. Rarely do I ever see homeschool groups with liabilities. Sometimes if they have payroll, they will have payroll liabilities. And then this is just accounting stuff. Don't freak out. Don't worry about this. The last portion of this balance sheet is called the equity portion, and this is merely the assets minus the liabilities. Okay. Down here, the liabilities plus equity should equal the assets, and this is when a balance sheet balances. When the total assets, the 12,000. In QuickBooks, it always works. Okay. If you're not using QuickBooks, a lot of times all organizations will do is say, on this date, here is the account balance in each of our checking accounts, PayPal accounts, something like that. It's just a report to the board of here's how much money we have in the checking account. And here's if we owe anybody, which you rarely do. Net income on this form, on this balance sheet, is also the net income, which means profit or surplus, on your other report, that profit and loss statement. That's how, again, the balance sheet balances. This is the connection between the two statements. And then QuickBooks, it works. It always works. You're doing it right. If they don't match, you have really done something wrong in your bookkeeping. Okay, and you're going to need a professional to unwind it. Okay. Some tips for this statement of the assets and liabilities are commonly called the balance sheet. The assets are listed first. The liabilities are below it. There should never, ever, ever be negative numbers on here. If you have a negative number, if you pull up your QuickBooks statement tonight, tomorrow, and you pull up the balance sheet and it has a negative number on it, something is horribly wrong. Okay, there should never be any personal names. I'm going to get back to that one in a minute. And very small profits rarely have other assets like equipment or buildings or land. They hardly ever do. They rarely have liabilities. And by the way, future expenses, like, oh, I gotta pay the tutors the rest of the semester, or I know I'm gonna have to pay the church rent. That's more future expenses are coming, but they're not liabilities. Liabilities are when you are legally bound, like a credit card payment, or you're legally bound to pay payroll taxes, okay? Like, if your program stopped today, you wouldn't have to continue to pay rent, but you might still have to pay these liabilities, like a mortgage or something like that. So liabilities are pretty strictly limited to things you must pay even if you went out of business today. Debt, okay? Think of them as debt. That's why very few of the nonprofit clients I work with have any liabilities ever. Okay. When your board looks at this balance sheet, here's the questions you should ask. Do we have enough cash to meet our liabilities? And again, very few of my clients ever have liabilities, so you almost always have enough cash. You might want to do a budgeting exercise, though, and say, am I going to have enough cash to meet the rest of the expenses I expect to see come up in the rest of the school year? That's more of a budgeting exercise, but not true liabilities, okay? But then you might want to ask yourself, okay, are any of the assets, any of the cash we have, is it reserved in any way? We're going to talk about deferred revenues, early deposits. Like, okay, we got a whole boatload of money sitting here over the summer, but we really know that those are early deposits for the fall. So we really can't touch that money over the summer. Or we're keeping a cushion for emergencies, so we're not going to touch it. The checking account we always keep an extra $5,000 in the checking account for emergencies or insurance deductibles or our future plans. If it's future plans, it should probably be in a savings account, right? So anyway, that's just something to ask yourself. You're also, as a board member, looking to see that you never have a negative number on that balance sheet, or something is horribly wrong, and you need to fix it. Here's what I was asked earlier about collecting these early deposits. There's a simple way, and then there's the more proper, more correct, but more complicated accounting way. Okay. Yeah, I'm going to agree with Doreen here. I just glanced at the chat. I'm sorry, I can't get to all your questions. I was like, maybe we should have made this 2 hours, but you wouldn't have come if you knew it was going to be 2 hours long. Okay. The simple method that a lot of smaller co-ops use is to just record those early deposits in the year that the cash hits your bank account. But and your board members know that it's really for next year. Okay? And you could even keep track, dear treasurer, and write it as a footnote. Yes, there's all this income that came in, but I'm tracking it, and I know that $2,000 of that income that came in this year is really for next year. Therefore, $2,000 in the checking account, it's a little footnote maybe, that's really for next year. So you just put it as a footnote, okay? The more complicated but more proper accounting method to do is something called using a deferred revenue account. It's actually a liability account. Weird? Yeah. What it means, it's really appropriate to use if you're using like accounting software like QuickBooks. But what happens when that money comes in, you don't record it as income or tuition or co-op fees or anything like that. You record it as what's called deferred revenue. I mean, it's revenue, but I have deferred it, meaning I'm not going to earn that revenue till the fall, when I have a liability. I owe that family either a class, because that's what they paid me for, the co-op class, or I owe them their money back, one of those two. And then what happens on the first day of the classes start, you've earned the money, and then you do what's called a journal entry. And this is why it's a little more complicated, and I want to get into it here, but I can show you a document with screenshots of how you put in a journal entry, and you then say, okay, now I have earned that money. I'm going to take it out of deferred revenue and put it into co-op fees, co-op income for the fall, when the fall happens. Okay, that's the real quick answer to it, but I can, you just got to email me, Carol at HomeschoolCPA.com, and say, I need that thing about early deposits. Okay, and that's again appropriate if you're using accounting software. Okay, ready to see some bad ones? Oh, they're bad, they're bad. Here's one. Oops, I'm sorry. I gotta skip that one because I didn't mean to put their name on it and I did. So we skip that one. Let's go to the ugly. Okay. Now she's not, I mean, the girl's not ugly, but she's dressed a little dowdy. She could certainly be better. She kind of reminds me of Amy on Big Bang Theory, don't you think? Okay. Here, let's look at their balance sheet, their listing of assets and liabilities. And do you see anything that's driving me crazy? Oh, yeah. Oh, yeah. Oh, yeah. This one, I couldn't believe it when I got it. Okay, first one. Look at this category. Okay, I don't mind bank accounts. That's nice. Cash on hand, $20 to be expected. Danielle. Danielle. Personal. Who in the heck is Danielle? And why is she getting listed as a bank account on a nonprofit's balance sheet? Turns out Danielle was the wife of the treasurer. Does that set off any huge alarms in anybody's mind? Oh, yeah. When I saw this, I immediately emailed and called the president. I did not call the treasurer who sent me this report. I called the president or emailed her first. I don't think I had a phone number. Said, call me immediately. And learned that Danielle was the wife of the treasurer. And of course, the negative number alarms me too. And within a few days, he was relieved of his responsibilities. Let me put it that way. What I do like, one thing he did right was PayPal. Yes, PayPal is a checking account. So they have a Fifth Third, that's a bank checking account. They have another checking account, which they named with their name. I removed their name. That's weird. Why you call it, group name, checking account, whatever. They have a second checking account. I don't know why. And a PayPal account. Okay. But then under other current assets, this is weird. Tuition payments. Tuition payments are not a current asset. Current assets are things like checking accounts, accounts receivable. An asset might be something like equipment you own, a building, land. That's it. That's weird. Okay. And the negative amount here on categorized asset, I don't like that either. And of course, that negative amount under Danielle's really, really alarmed me. So this is a very, very bad balance sheet. Very bad, very ugly. Okay, here's the bottom half with the liabilities, current liabilities. Oh, they've got some payroll liabilities. Okay, that makes sense. But some things on here really confuse me. Okay, what in the heck is family tuition? And why is it a payroll liability? I don't know. That's very odd to me. I don't understand that. And what happened was, I think it's messy bookkeeping. What happened was many of the tutors in this organization also owed tuition for their families. They had their kids enrolled. So they were paid as employees for teaching. They also had to pay the organization tuition for their own kids. And they were asking, can't you just take the tuition out of my paycheck? And that's what they were attempting to do here. And I think they did it wrong. Okay. And then a negative dollar amount. Illinois unemployment tax, why would that be negative? Maybe they were given a credit. I don't know. That seems weird. And then this category here called tuition. What? Tuition, is that a liability? Payroll liability? No, payroll liabilities are usually wages payable, meaning I haven't paid somebody their paycheck yet because it's the middle of the month. And taxes, like they've listed here. So these are weird and confusing, and they had to hire a bookkeeper because the volunteer treasurer who's putting his wife's personal name on things was kicked out. So they had a lot of cleanup to do that here. Really unfortunate. Here's another one. Here's their assets. I'm not going to show you their liabilities because their assets will keep us interested enough. You see anything? You see any problems there? Bank accounts. Have you ever heard of the Bank of Bunko? The Bank of Poopathon? Or, oh my gosh, they're breaking down their savings accounts into many categories, but you ever heard of the Bank of School Registration and Script? Okay, I don't know what they're doing here. But I understand kind of they're trying to split their savings into sub-savings accounts. They're saving money for, they're saving money for tuition donations? I don't understand that. They're saving money. Savings, donations, meaning money came in as donations, $16,000 worth, and they put it in the savings account. But you know what the donations are because that was on the income statement. You don't need to have a savings/donations. Okay, some of this stuff is just someone who does not understand how to use the software at the beginning. Script is a fundraiser. It's not a savings account. Okay. Oof. Anyway, they had more problems, but a negative number. Negative dividends. Dividends are a source of income. They are not a checking or bank account. Okay. Whew, enough of that. Are you done seeing the ugly? Okay. Time for some questions about that stuff. Tara, are you handling these?
I am, and we have a lot, so we'll see how many we can get to. So I think one of these is perfect based on your last example. Sue Ellen asked, is it okay to have 12 to 15 checking accounts? We have several co-ops as well as sports teams.
Oh, and they have their different checking accounts. I guess so. It's, it takes a little more management because the treasurer over it all has to keep her eyeballs on 12 different accounts. But I can understand why you might want to have 12. I don't know, Sue Ellen, that's a lot to manage. Either that or would it be easier to just give a debit card to some of these programs instead of having access over their own checking accounts? I don't know. It's probably something you and I need to talk about. But if it's becoming too much to manage, at my church, okay, and my church has a budget of $4 million. We have 2 checking accounts. The preschool gets their own, okay, because they're like a rather large operation at my church. And then there's the whole church checking account. And that is it. The youth group doesn't have their own checking account. No. MOPS doesn't have their own checking account. They run it all through, but we have an accounting staff of 3 people. And so those 3 people are entering all the transactions.
Okay, great. We've got another question from Angela. If our group does not collect money for the teachers, but the teachers are paid directly by parents, do we need to report the teacher income as we would if we actually had the teachers as independent contractors?
No, but the money never touches you guys. It does not belong to you. It is not your income. It should go right from the parents to the teachers without touching you, not held by you, not touched by you, nothing. So no, it is not the co-op's income if it's not your money.
Wonderful. Okay, I've got another question about PayPal. Some of our parents pay through PayPal. Mm-hmm. We dump the payment as a deposit into our bank account frequently, so our PayPal account is almost always zero. Is this acceptable?
Well, in a perfect world, you would record, you would have, and this is in a perfect world, you would have a checking account. You would see PayPal as a checking account. Money comes in and fees get deducted, right? Every time PayPal always wants their fee. And then there is a transfer. And if you're using QuickBooks, this is how it's done best. PayPal is a bank account. Money comes in for something, co-op fees, minus the PayPal fees, which are expenses, and then money gets transferred. There is in QuickBooks under banking this thing called transfer, and what you're recording is that you're transferring money out of PayPal into your checking account. So it's not, what the problem with what you're doing right now is you're probably only recording that income when you make the transfer, and really the income came in earlier than that. And the fees got deducted. So again, if you're not showing this was the income I brought in and these were the fees that I had to pay PayPal, you're misrepresenting both. Both your income is being underreported and your expenses are being underreported. So there's kind of 2 errors going on by you trying to make it simple. So we accountants, we like things accurate, okay?
So to follow up with that, we have another question from Michelle, and she's asking, when you do a transfer from PayPal to the checking account, is it called journaling?
It doesn't have. It can be done as a journal entry, but again, if you're using QuickBooks or any of the accounting software, they have a something on the menu. You go under banking and hit, transfer, and you type in what account you want to transfer into, or what do you want out of, what do you want into, and it, in the background, it does become a journal entry. Yes.
Awesome. Okay. We have another question from Shelly. She asks, can we use a deferred revenue account even if we're accounting on a cash basis? And she's wanting to do this for the benefit of the board members to help understand their reports.
No, if you're setting up deferred revenue, you have just moved into accrual accounting, and you are no longer reporting cash basis accounting. So what you can do is continue with cash basis accounting and just put a little footnote to the board members of, hey, I reported all this income because it deposited all when it came. That's cash basis. But please understand in a footnote that some of this is reserved for next year.
Wonderful. Okay, we also have a question about how long people should keep their receipts.
This is like receipts that come in and you reimburse somebody for the receipts. Typically, I think 3 years is good enough. 5 if you're a real pack rat, but I think 3 years is good enough. I have a blog post about how long to keep what. Some things you keep forever, like the letter from the IRS that gives you your tax exempt status and your EIN. You keep that forever. You laminate those. That's how long you keep them. Other things you can purge after 3 years. I think I might have blipped out. It says my internet connection. Anyway, I have a blog post. Go to homeschoolcpa.com and look up a blog post about how long to keep financial records or something like that. Okay. Are we there, Tara? Can you hear me? Oh, Doreen, can you hear me? Oh dear.
I can hear you.
Yes, I can hear you now.
Okay, we're back, Tara. Okay.
Yeah, I think
each other for a minute.
Carol, all right, Tara, I think maybe Carol didn't hear your question.
Okay, the question was about how often should they be doing reporting, and should they only report that period's transactions versus a year-to-date kind of report?
Okay. In a perfect world, monthly. You would give a monthly report. If you it depends on the size of your organization, though. Some small ones don't meet monthly. Sometimes the treasurer doesn't have enough activity to report monthly, so quarterly might work for them. But monthly is typical. And I give, when I've been treasurer, I say, here was the month most recently, that we've finished, and here is the year to date. So sometimes that's 2 pages, or sometimes if you can squash it into a spreadsheet, it's columns. Like here's June, and I didn't get into it here, but I like showing budgeted amounts too. So here's the income and expenses for June, and the next column over is the budget. And then I show year to date, income, expenses, next column over, year to date budget. So it's a little bit much for my boards to look at, which is why I try to keep it to 1 page. Maybe 2 though, if you're trying to also show a category of year to date and you're trying to show a column of the budgeted items as well. Okay. Oh, I don't know. I keep hearing. I don't know if I'm blipping out or if you're blipping out, Tara.
I'll jump in for Tara here. Here's another question. We've had teachers, Amanda wants to know, we've had teachers ask us to not reimburse them for a class expense for a class they teach, and instead reduce their bill by that amount.
What is, their bill, meaning
their
okay,
tuition.
Let me clarify this. Okay, so that tuition. Family, that woman, yeah, this is very complicated about homeschool groups because so many people wear 2 hats. So you have someone who is supposed to be being paid and at the same time is spending some money and needs to be reimbursed. I believe very fervently you don't ever net those transactions. You never mix them. You don't do what she just asked. You pay her completely what she's supposed to be paid because that keeps your bookkeeping clear about, nope, this is what you were supposed to be paid. If you owe me money, if that woman owes the co-op money, she pays her full bill, her students. If you owe her reimbursement, you write her 2 checks. You write her 1 check. Here's your pay for teaching the class. Here's another check for reimbursement. I might be getting the question a little bit mixed up, but I don't like those mixing of, oh, just pay me what I'm due. Or no. You saw how messed up that one balance sheet got because they were trying to take what the parents owed in tuition out of the teachers' paychecks, and it messed up their bookkeeping something fierce. So I am a strong believer in make every transaction different for the clarity of your record keeping. Hope I'm clear on that. I feel like it's getting late and I'm getting tired and I'm not talking clearly anymore.
We still have quite a few questions, but it is late. And as you said, Carol, maybe you would address those in a future blog post, yes?
I think so. Let me finish up the webinar here with the last little bit of information because we're almost done. And if we want to stay a little bit longer and answer a few more questions, we can do that. How about that? Okay.
Sounds good.
All right. In summary, make beautiful financial reports. The two reports are the income and expenses, sometimes called profit and loss, the assets and liabilities, sometimes called the balance sheet. I would say most of the mistakes I see happen is because the board or the treasurer never pulled up a balance sheet. Even if they're using QuickBooks, they never pulled up the balance sheet. And when I get a QuickBooks file or can look online, that's like the first place I go. And if I see negative numbers on that balance sheet or something out of whack, it's like, gotta stop here. You gotta fix that. Something's very wrong. Please use standard categories and subcategories. You only need 4 categories of income and 4 categories of expenses, then have subcategories underneath it. Makes it easier to read, makes it easier to understand. Please, no negative numbers. That's a huge red flag. And here we go. If you follow those tips, Stacy and Clinton would be so proud of you. Look at how they're smiling at you. Yeah, okay. So here's more information. I think I gave this earlier. My website is HomeschoolCPA. There's a lot of information on there. There's a lot of information in the book, Money Management in a Homeschool Organization. You can find that at HomeschoolCPA. My email is carol@homeschoolcpa.com, and the Facebook group, I am a homeschool group leader. And you're invited to join that. And yeah, I think that's it. So we can take a few more questions, but hey, I just want to say everybody that's joined us, thank you. I hope it was helpful. Sorry if we couldn't get to all your questions. I would like to do something like this again, maybe a different topic. You can certainly either now in the comments as we're answering some questions now, put what kind of topics you'd like to talk more about. Maybe I could do one more detailed about like checking or reimbursements or something like that. Don't want to get too picky, but or too particular in a topic, but if the same kind of questions come in all the time, it's something that needs to be addressed. So, okay, Tara or Doreen, I don't know how you want to handle the last few questions. I don't know if there's anything, oops, I could scroll back and look at myself.
I have a couple that came up regarding income. One was about how do you report, how would you categorize advertising income? So someone is advertising maybe on your website. The other one was if you are selling curriculum, would you do that as program income? How would you categorize that? Yeah,
I would think easily as a homeschool group, curriculum is a program, a source of program income. Yes, okay. That one's easy. Advertising would be a fundraiser.
Okay.
In my opinion, because in the IRS's eyes, that is called unrelated, meaning unrelated to your purpose, to your program. You are not in the business of advertising, and it's unrelated to your program, so its function is to raise money. It is a fundraiser. And then you might have fundraiser expense, but I kind of doubt it. Fundraiser expense usually only happens when like you're selling candy bars and you got to buy the candy bars, you know, or candles, that kind of thing. But no, I would consider advertising income as fundraising.
Okay. And earlier in the chat, someone asked, do you have to have just the 4 categories or can you have more subcategories? So I kind of took that to mean, how do you decide?
Here's the thing. If you have, again, it depends on the size of your organization, but if you have more than $50,000 of gross revenues, you're filing this IRS report. The IRS only has those 4 categories of both income and expenses. So if you have more, you're making it more difficult for someone like me or your treasurer to prepare that IRS report, because now I got to figure out, well, which of those 4 do I put these things in? And it's just, it would be what, you know, and if I got statements like that, I would charge you more to ask questions, but, you know, rather than you having classified it into those standard categories to begin with. That's why you can use subcategories under program income or fundraising income or something like that.
Okay. Here's another one that's kind of different. What if our not-for-profit made a donation to another not-for-profit? For example, our math class did a bake sale and gave the proceeds to an orphanage.
That's very nice. Thank you for doing that. Let me think. So I would probably put that under other expenses. Donations out. Actually, on the IRS Form 990, there is a place where you can list contributions. So actually, I'm going to back up a little bit with what I just said earlier, but the IRS really does have more categories of expenses on their 990. But still, you have to rack and stack them. And you have to say, is this still a program expense, a general administrative, or fundraising expense? But donations would be probably, I would probably classify it. If it's related to your program, like it's an organization a lot like your program, like another educational program, but you went to an orphanage that was truly like maybe outside of your program expense, I'd put it under other expenses.
Okay.
That one's hard.
We have one question here that was earlier that I want to make sure that we get covered, and this is about script programs.
Yeah.
She said that she'd read, you've done a blog post on the past saying you're not a big fan of them, and that now that they let members order directly online from the app, that the cash handling is completely gone.
Good.
And the script company has made it very clear that all of the money belongs to the members.
Yeah, that's a really interesting case. Thanks, Tara, for bringing that up. One of the reasons I didn't like it
deposited into their bank account income or just the handling fee?
I missed. You blipped out a little bit, Tara. I'd have to research a little bit of that. Okay, so whoever asked that question, please email me what you know about the new script program again. What I didn't like in the beginning is what I saw was homeschool groups would bring in a ton of money and then turn out a ton of money. And it was a lot of money flowing in and out. And sometimes it was so much money, tens and $20,000, it would put them into the next level of reporting with the IRS. I'm like, but the profit you made on that script was only a few $100s. Isn't it easier to have a few pizza fundraisers for the few $100s of profit you made? And then it was complicated by the script actually went to the IRS and got a specific, what's called a private letter ruling to say, this is one of the rare cases where a fundraiser can go directly to benefit the individual members who did the fundraising. In general, your fundraising proceeds cannot flow down to individuals. That's a violation of your 501c3 tax exempt status. But Script argued their case successfully before the IRS. So those can be set up in like what you might call individual fundraising accounts or go directly to individuals. The detailed question you asked, I don't know. I'd have to research that, to be honest, and think about that a little bit more than I can do right now at 9:30 at night.
I'll jump in here with one that is pretty complex and probably answered in another one of your books. This is about fee discounts for tuition. Will that be taxable income if the family volunteers? So the family is volunteering and
they get a fee discount.
Okay. Yeah, that
is very complicated, Doreen, and you know, because I've tried to answer these on some of the Facebook.
I know.
Stuff. And I'm going to give this answer that's completely unsatisfying. It depends. Okay.
And maybe some book, right?
Well, it really depends on quote how significant that discount can be, and does it look like that discount is significant enough that what you're really paying them for is their volunteer labor, and then maybe it should be taxable income. So some co-ops, will ask me this question, and I'll say, well, what kind of discount are you giving? And they'll say, oh, $25. No problem. This person worked 100 hours or something crazy like that. Other groups are telling me, oh, we give $2,000, $4,000. Oh, that sounds pretty significant to me. That might be considered taxable income. So I hate to say that, it depends, but it really does. And there's no bright line test where you say, oh, you get over this dollar amount and all of a sudden it's taxable. It's not like that. The IRS has more excuse me, qualitative, not quantitative measures, and it's not clear cut all the time. So it depends on the facts and circumstances of your particular case. Sorry, that's just like not an answer, but
it is an answer. It is. Okay, Carla is wanting to know, is a budget report not a separate report? She said it sounds like you incorporate it into the income and expense report.
I like showing it that way because, I mean, obviously you work up a budget at the beginning of the year, and your board should approve a budget, and it will look a lot like, here's the income we expect and here's the expenses we expect, but it's our budget. But then every year you got to monitor, every month or quarter, you monitor how we're doing against the budget. So that's why I like showing, yes, the income, the profit and loss, the income and expenses here in one column, and right next to it, the budget.
Okay, thank you. Again, Shelley is having some questions here about combining accounts in QuickBooks. If I realize that some of my accounts are not categorized correctly, or that I should combine accounts, how can I change that in QuickBooks without messing up the previous years, or what are the potential consequences of recategorizing, reassigning accounts?
You go into the chart of accounts and you can start editing, and I think there is the option about QuickBooks will ask you, do you want to go back and fix everything in the past or just go forward? So you could say, don't change anything in the past, just go forward. Some of that is, you might have to start Googling or go on YouTube and start looking at, go on YouTube. There's tons of great videos on YouTube about QuickBooks, and type in something like, editing chart of accounts. And somebody will show you how to do it, and maybe also talk to you about that. What if I don't want to change the past?
Okay, great. Julie, we still have a few questions if everyone wants to hang in there. And Julie would like to talk about another in-kind donation. Their organization receives a $50 gift card from a local grocery store several times a year. The gift cards are used to purchase refreshments for various events. Oh. Does this type of in-kind donation need to be recorded? And then she has a specific state of Florida question. I'm not sure if you want to get into that.
I don't know. I've never been asked that. Okay. So you get a gift card and then you go right back out. So I don't know. That's a really good question. I'd have to research that one, honestly. It could, again, at least be a footnote. Like we received, 4 gift cards from the grocery store, just so your board is always kind of aware, like, okay, that's why we don't see the extra $150 for refreshments. And some year in your budgeting, you're not going to get that from the grocery store anymore. And you know what I'm saying? So it's just more an awareness that your board needs to be aware of this happening than really needing to be recorded as income and expenses. That's a good question. I don't really know.
Okay, let's see if we've got some more. Kelly wants to know, should the reports the board members review be cash or accrual?
If you are, it's a really good question. If you are invoicing your parents, that's accrual. If you are accepting early deposits and you're using software, you should be using accrual. Almost always organizations move to something like QuickBooks because of those things. I'm invoicing, accepting early deposits, and you should probably then consider accrual accounting and not cash basis. Cash basis works pretty well if you're just keeping things on an Excel spreadsheet, or a more simple like Quicken, or those money managed, more like electronic checkbooks, which is what Quicken is, an electronic checkbook. Those are cash basis.
Okay, thank you. Another one, where Dib wants to know, where do we add deferred revenue on our profit and loss for the current year when class starts, or previous year when collected? I'm not sure if we answered that previously.
Okay, deferred revenue doesn't go on the profit and loss. Deferred revenue is on the balance sheet. It's a liability.
Okay.
Now ask the second part of this question again.
It was for the current year when the class starts, or the previous year?
You record it as deferred revenue in the year you receive it.
Okay.
And then when you turn over to the new fiscal year, you do a journal entry and you take it out of deferred revenue and put it into now the this is where you would put it then on the income statement as earned income at that point, which would be like program income. You do that with a journal entry in accounting software.
Okay.
That's what I show you in screenshots. It's kind of complicated to describe in words. It's easier to show it on a document, which is why I have a document I can email to folks if they email me about it.
Okay. Michelle would like to know, she uses QuickBooks Online to keep her class budgets, income and expenses. And which income account does this go under? Is it considered a sub-account?
Can you read that again, Doreen? I didn't understand that.
Right. Yeah, I'm not sure I do either.
Okay.
Because she's combining income expenses and, okay. She uses QuickBooks Online to keep her class budgets. And then in parentheses, she says income and expenses. Then the question is, which income account does this go under? And is it considered a sub-account?
Okay. I'm not sure. I'd have to kind of look, and she, at her QuickBooks Online, but
right.
She has classes like biology class, and she has a budget for biology class, I assume.
That's what it sounds like.
She doesn't want biology class to overspend their budget.
Right.
So there is a feature in QuickBooks and QuickBooks Online, and it's confusingly called classes. Okay. And she could and she should go again to either Google or go to YouTube and learn how to set up classes in QuickBooks Online. And what she would then have is a list of classes. One would be called biology. One would be called art. And when she goes in, she can say, it's like a kind of a subcategorizing of income or expenses by classes.
Okay.
And it's a little, I don't want to go into it any more than that, other than to tell her, go to YouTube and put in QuickBooks Online classes and see if that might be a good tool for her to use to keep track of how much money came in for the biology class and how much went out for the biology class.
Okay, thank you. I think Michelle has a number of QuickBooks specific questions that maybe would not be.
We're not gonna get into QuickBooks.
Get into those. So
yeah, I'm sorry.
Other than that,
my best advice is go on YouTube. There's some fabulous videos out there. There's also a wonderful woman I've been following. It's called 5 Minute Bookkeeping. And she does some great QuickBooks tips and tutorials. 5 Minute Bookkeeping. Okay. She's great.
Great. Okay. And Michelle is going to be making an appointment with you, she says. So that's wonderful.
Okay.
Thanks for your question.
I'm getting tired. I'm sure you are too.
Yep.
I think we should wrap up.
That wraps up our questions as well.
Oh, good. All right. Well, let's go back to mine. Thank you, everybody. Thank you, Tara and Doreen, for helping out. I couldn't have done it without you because I couldn't be reading and talking at the same time. Thank you, everybody, for all your questions. We'll stop the recording now, and we'll work at getting you the recording and I think the handout and stuff like that. So have a good night, everybody.